Compound interest is considered one of the most powerful concepts in the world of finance. Although many people hear about them, few truly understand the impact they can have on growing your money over time. When you invest, compound interest means that income is not only generated on the initial amount invested, but also on the income accumulated previously. It's like a snowball. Growth is slow at first, but over time it accelerates impressively. Imagine the following situation. You start investing 100 Brazilian reals per month. In the first month, 100 Brazilian reals is invested. In the second month, in addition to adding another 100 Brazilian reals, you also start earning income on the 100 Brazilian reals invested in the previous month. As the months and years pass, the amount grows not only due to your monthly contributions, but also thanks to the accumulated income that continues to generate new earnings. This effect becomes exponential as time passes. Let's exemplify with simple numbers. Suppose you find an investment that offers an annual rate of return of 10%. In the first year, your 100 Brazilian reals would grow to 110 Brazilian reals. In the second year, instead of earning interest only on the initial 100 Brazilian reals, you would earn interest on 110 Brazilian reals, totaling 121 Brazilian reals at the end. In the third year, income would be calculated on 121 Brazilian reals, and so on. This interest-on-interest effect is what makes compound interest so powerful. Now, let's jump forward to 10 years. If you invested 100 Brazilian reals every month during this period, with the same rate of return of 10% per year, you would have accumulated around 20,000 Brazilian reals. It seems magical, but it's not. It's simple math working in your favor. The amount is not only the result of the 12,000 Brazilian reals you invested over the 10 years, 100 Brazilian reals x 12 months x 10 years, but also includes the income generated by compound interest. What makes compound interest even more interesting is that it works better the earlier you start. The longer your money has to grow, the greater the impact of this effect. This means that even if you are starting with as little as 100 Brazilian reals per month, it is essential to start as soon as possible. Every year you delay starting your investment represents a missed opportunity to see compound interest work for you. Furthermore, compound interest is not just time-dependent. They are also impacted by the rate of return you achieve on your investments. Higher rates generate higher returns, but they can also come with greater risks. Therefore, it is essential to find a balance between profitability and security, especially for beginners in the world of investments. The next step is to understand how you can apply these concepts in practice. There are several investment options on the market that allow you to enjoy the benefits of compound interest, from Tesouro Direto to shares, investment funds, and CDBs. Each of them has its own characteristics, advantages, and disadvantages, and the choice will depend on your investor profile and your financial objectives. However, the most important thing is to understand that compound interest works as a powerful ally for those who have patience and discipline. It doesn't matter if you're starting small. What really matters is maintaining consistency, reinvesting income, and giving enough time for the exponential effect to manifest itself. Over time, you will see how even small amounts can turn into big results. In the next part, we will explore how investments can be made in practice, using real examples and simulating the results you can achieve by investing 100 Brazilian reals per month. Additionally, we will discuss the importance of choosing the right investments to maximize your returns and protect your money. Now that you understand the concept of compound interest, it's time to put it into action. Let's explore how investing 100 Brazilian reals per month can generate surprising results in 10 years. To do this, we will carry out simulations based on different rates of return and discuss the investment options available on the market. It's important to remember that, although the examples are approximate, they reflect real scenarios that you can apply to your financial life. First, let's look at the simulation for an investment with an average return of 10% per year, a common rate for moderate investors in Brazil who diversify between fixed and variable income. Suppose you start with a monthly contribution of 100 Brazilian reals and maintain this discipline for 10 years. In total, you will have invested 12,000 Brazilian reals over this period. However, due to compound interest, your final balance will be close to 20,000 Brazilian reals. This happens because the money accumulated in the fund continues to yield even without new additions beyond monthly contributions. Now, what if the rate of return is lower, like 6% per year. In this case, at the end of 10 years, the accumulated amount will be approximately 16,500 Brazilian reals. This example is common for low-risk investments, such as CDBs and Treasury Selic. Still, the growth is considerable in relation to the total amount invested. For those looking for security and predictability, these options may be more suitable. On the other hand, if you have a more daring investor profile and look for investments that offer an average return of 12% per year, the final amount could exceed 23,000 Brazilian reals after 10 years. In this case, investments in shares, multi-market funds, or even ETFs can be good alternatives. It is important to remember that these products involve greater risk, and the return may vary according to market conditions. Now, how to choose the best option to start investing? The first step is to define your objective. What do you hope to achieve with this investment? Are you building an emergency fund, saving for a specific goal, or looking to create long-term wealth? Setting clear goals will help you choose the financial products that best suit your profile. For example, for those who want security and liquidity, fixed income products such as Tesouro Direto, CDBs, and LCIS are ideal. They offer predictability and protection against significant losses, making them an excellent entry point for beginning investors. For those who have a long-term horizon and tolerate more risk, the stock market and investment funds can offer greater returns. The key is to find a balance between risk and return by diversifying your investment portfolio. Furthermore, it is essential to be aware of the costs involved. Many financial products charge administration or brokerage fees, which can impact returns over time. Therefore, prefer investments with low or no fees, especially if you are starting with small monthly contributions such as 100 Brazilian reals. Another essential point is automation. Nowadays, many banks and brokers allow you to set up automatic contributions to your investments. This functionality is excellent for those who want to maintain consistency without relying on their own memory or discipline. Just set up an automatic transfer on payday, for example, and ensure that the 100 Brazilian reals is applied every month without fail. Finally, it is important to remember that investing is a constant learning process. Over time, you can seek to improve your knowledge of the financial market, exploring new products and strategies. The more informed you are, the greater the chances of making the right choices and optimizing your income. However, the most important thing is to start. Don't worry if the initial amount seems small. Remember that time is your greatest ally in the world of investments. With patience, consistency, and the power of compound interest, even 100 Brazilian reals per month can make a big difference in your financial life. Investing 100 Brazilian reals per month may seem simple, but maintaining discipline over 10 years is a true test of commitment. This journey is built on small, consistent actions, and, for many, the biggest challenge is not in the act of investing, but in resisting the temptations and pitfalls that may arise along the way. Let's explore how you can stay focused, avoid common mistakes, and maximize the benefits of this practice over time. Maintaining consistency is the foundation of financial success. It may seem tempting some months to skip investing to cover an unexpected expense or to spend on something that seems urgent at the moment. However, these pauses can significantly affect the final result of your investment. Even small interruptions can reduce the impact of compound interest over the years. Therefore, it is crucial to view investment as an essential bill, as important as paying for electricity or water. Another common pitfall is underestimating daily expenses. Oftentimes, the money you think you don't have to invest is being eaten up by seemingly insignificant expenses, like impulse purchases, underused subscription services, or eating out. Conducting a detailed analysis of your expenses can reveal areas where you can save to ensure that the monthly 100 Brazilian reals is invested without compromising your budget. Furthermore, it is essential to avoid panic in times of financial instability. The financial market is known for its fluctuations, and, during periods of crisis, it is common to see the value of certain investments temporarily drop. However, these periods of decline are part of the natural market cycle, and those who keep calm and continue investing during these phases tend to reap even better results in the long term. Remember, investing is a marathon, not a sprint. Another important tip is to review your investments periodically. As your financial life evolves, you may need to adjust your investment strategy. For example, if you receive a salary increase, consider increasing the amount of your monthly contributions. Likewise, if your financial situation changes, it's worth re-evaluating your investment portfolio to ensure it's still aligned with your goals. It is also essential to avoid investments that promise quick and guaranteed gains. They are often traps in disguise, attracting inexperienced investors looking for shortcuts to get rich. Instead, focus on proven strategies that value consistency and time as key growth drivers. Remember, if something seems too good to be true, it probably is. Finally, celebrating your financial achievements along the way can be a great way to stay motivated. At the end of each year, analyze how much you have accumulated and reflect on the progress you have made. These moments of celebration help reinforce the importance of your discipline and serve as a reminder that every small action contributes to achieving larger goals. Now that you know the main strategies for maintaining discipline and avoiding pitfalls, you are ready to continue on your investment journey. To ensure success on your financial journey, it's vital to recognize that investing is more about habits and mindset than just numbers and returns. This is where financial education plays a crucial role. The more you understand about how money works, the easier it will be to make smart decisions and avoid pitfalls that could compromise your progress. For example, understanding the difference between assets and liabilities can completely change your approach to finance. Assets are things that put money in your pocket, like investments or properties that generate income. Liabilities are items that take money from you, such as debts or purchases that depreciate over time. Knowing how to identify and prioritize asset acquisition can accelerate the growth of your wealth and ensure you are on the right path to achieving your long-term goals. Another valuable lesson is learning to deal with emotions when it comes to money. It's common for beginning investors to make impulsive decisions based on fear or greed, such as selling investments during a market crash or trying to guess the right time to buy stocks. These practices, known as market timing, are extremely difficult to get right and, most of the time, lead to losses. Therefore, adopting a long-term approach and avoiding decisions based on emotions is fundamental to success. If you haven't started investing yet, don't worry. The important thing is to take the first step, no matter how small it may be. Investing 100 Brazilian reals per month may seem small, but it is a significant amount to build a habit and take advantage of the power of compound interest. Over time, as you increase your income or reduce expenses, you will be able to increase your monthly contributions and further accelerate the growth of your assets. On the other hand, if you're already on track, use this time to review your strategy and ensure you're maximizing your earning potential. Make sure your investments are aligned with your goals and that you are diversifying appropriately to reduce risk. Additionally, stay up to date with the options available on the market and always be willing to learn more about finances. Finally, never underestimate the power of planning. Set clear goals for the next 10, 20, or even 30 years. Imagine the impact consistent investing will have on your life and visualize the future you want to achieve. These goals will serve as a constant reminder of why you are investing and will help keep you motivated even in the most challenging times. With all this in mind, you are more than prepared to transform the simple habit of investing 100 Brazilian reals per month into a powerful wealth-building tool. Now that you've learned how to invest 100 Brazilian reals per month and seen the incredible impact it can have on your financial future, it's time to take the next step. It all starts with the decision to start today. Don't leave it until tomorrow, because every day that passes is a lost opportunity to make the most of time to your advantage. Remember, the most important investment is in your future and your family's safety. If this content helped you, how about sharing it with other people who also need this information? Together, we can create a stream of financial education and help more people achieve their goals. Oh, and if you're not yet subscribed to the channel, take the opportunity to subscribe right now. Here you will find content that really makes a difference in your financial life, always in a practical, objective, and easy to understand way. Also leave your like and a comment below telling me what you thought of this video and what themes you would like to see in the next content. Your interaction is super important so that I can continue to bring you valuable information. And don't forget, the path to a more peaceful financial life begins with small steps, but each step counts. Thank you so much for watching, and we'll see you in the next video. Until then.